Hello traders, you are welcome back to the Forex Geek channel. In this particular video, we are just going to be diving deep into a tool that has been catching a lot of attention lately, and that is the Echo Forecast TradingView Indicator. All right, this is the Echo Forecast Indicator on TradingView. All right, so this is not your average moving average, all right, or oscillator. This tool actually projects what might happen next based on previous market behavior. Now, what is the Echo Forecast Indicator? Basically, the Echo Forecast works by taking past price patterns and echoing them into the future. That is what the indicator does. All right, it takes past price patterns and echoes them into the future. Think of it like holding a mirror up to the market's history and using that reflection to gauge upcoming moves. It overlays a prediction path on your chart, right? Allowing you to visually track how similar patterns played out before and how they might play out again. It doesn't give you hard signals. Instead, it gives you a forecast, all right? A visual projection of what could unfold. And when used with key trading concepts, it can offer major clarity in volatile conditions, okay? Now, how do you set up this indicator on trading? Basically, just search for the indicator like I did at the beginning of the video, right? Just search for the indicator right there. Once you have done that, in the public indications library, you add the indicator to your chart. You'll see a ghost-like projection right here, okay, plotted into the future, following the shape of previous price action. Okay, now let's just go to the settings, right? So you can actually modify the settings according to your taste. All right, you can modify the evaluation window, the forecast window, the forecast mode, right, and the forecast construction, all of that, right? You can actually modify this indicator according to your taste, okay? And then simple tweaks in the settings can actually help align the indicator to your trading style, whether you scalp the 1 minute or swing trade the 4-hour chart. Meanwhile, this indicator shines when paired with support and resistance levels. All right, when using this indicator, do not neglect your support and resistance zones. Okay, don't neglect your support and resistance zones even when using this indicator. All right, pay attention to these zones. They're very important zones that can give you idea about potential reversal points, breakout points, and what have you. So also make use of trend lines, right? Trend lines help you with dynamic support and resistance zones. You can see this was a dynamic resistance before it got broken and it turned into a dynamic support. You can see how price was rejected here and went all the way up to this point, break out above this resistance, kept on going up all the way up to this point until it got to this resistance. All right, also pay attention to your candlestick confirmations, all right, and volume spikes as well. Also pay attention to volume spikes. It's very important. For example, if the Echo Forecast predicts a reversal and that prediction aligns with a strong resistance zone and bearish engulfing candle, you've got a high quality setup forming. So don't treat it as a signal generator, just think of it as a forecasting compass. It helps you anticipate moves, not react blindly. All right, now this indicator is best used during trending markets, okay, where patterns tend to repeat. All right, So avoid using it in extremely low volume or choppy markets. This indicator works across Forex, crypto, stocks, and indices. You can use it on any time frame, but most traders get strong value on 5-minute chart, 15-minute chart, and the 1-hour chart. Where price structure is clean and readable. Meanwhile, when using this indicator, do not neglect your risk management. Okay, do not neglect your risk management. Pay attention to how much you are risking per trade. Do not risk more than 1 to 2% of your account balance in a single trade. Do not even trade with an amount that you cannot afford to lose in the first place. And pay attention to good risk to reward ratios. Like I already mentioned, if you get a forecast of a reversal around a resistance zone, and maybe you get a bearish candlestick pattern, you can be looking out for sell opportunities. So maybe you have gotten your confirmation and you want to enter a sell trade. You can proceed to enter a sell trade. Your stop loss can be above your stop loss can be above the previous swing high or the recent swing high, and your take profits can actually be around key support zones. That's for a sell, right? Around key support zones. All right. Then for a buy trade, right? For a buy trade, you can actually set your stop loss below swing lows, previous swing low, and you can target resistance zones for your take profits. All right. Ensure that you always have a good risk to reward ratio. Okay, it's very important. Your risk to reward ratio, I will recommend a minimum of 1:2, meaning if you are risking $10, you are potentially targeting $20 in profit. Okay, if you're risking 10 pips, you're targeting 20 pips in profit minimum. All right, that is for every dollar you are risking, you are aiming to make $2. Now, the Echo Forecast TradingView Indicator does not guarantee outcomes, all right, but it gives you a serious edge in anticipating what the market might do next. There is no guarantee that what the forecast says is going to come to pass, okay? There is no guarantee that the indicator will forecast accurately, all right? So just take caution, okay? By studying how the past repeats itself, you gain deeper insight into price behavior and better timing on your trades. You can add this indicator to your charts, align it with your analysis, use it to stay one step ahead. If you found this breakdown useful, hit that like button and subscribe for more powerful strategies and trading view indicators that help sharpen your edge every single day. In the meantime, thank you for watching, and I look forward to seeing you in the next video.